Good morning and thanks so much for tuning in. You're watching Trade Talk on BQ Prime. My name is Alex Matthew and with me as always is Hiral Dadia. Morning, Hiral.
Good morning, Alex.
The bulls keep marching upwards and I think they're supported in a big way by foreign institutional investors here.
Absolutely. They are in top gear right now. And that's the trend that we've been picking up from the auto space as well. With the Triumph, the Harleys, as well as if you talk about any of the other luxury bikes, they're absolutely in competition right now. And that's what the markets are actually indicating as well.
I think that was one of the key stories yesterday. There were two stories that I focused on. One was the Bajaj Finance and Bajaj Finserv, the Bajaj twins essentially. And then the opposite stories, if you will, of Hero MotoCorp on the one end gaining over 4% and Eicher on the other end, the worst performer on the Nifty 50, losing about 6%. And that's exactly what Hiral was talking about. Royal Enfield facing stiff competition from Harley as well as Triumph. And that's, I think, a battle that will play out over the course of the coming months.
In fact, the Shah will be getting us more updates from Pune today as well with the Triumph launch, what the pricing is going to be looking like, because that's going to be the biggest point that the consumers are going to look at as well.
Not just consumers, also investors in Hero MotoCorp, because that will decide whether or not people go towards Harley or in fact towards the Triumph.
Absolutely. And with this as well, as we were discussing about markets, clearly, a 6 consecutive session of gap up opening is what we've seen. Now, with all of this said and done, the options activity is clearly indicating that 19,400 strike is the level where we will see some direction that will come in as well, whether we are going beyond 19,400 or we see selling pressure in today's session. If you see in terms of the FPIs, as Alex was mentioning, good support came in from there because the long short ratio has crossed 70%. So the FPIs have continued to build long positions in the index futures. Now, the open interest in terms of where Nifty index futures go, they've seen long build up in last 5 of the 6 trading sessions. Interestingly, if you see the put call ratio as well, that's risen to 1.41 from a 0.81 in the last 6 trading sessions. And what this is indicating is that the put writers are in a driving seat so far. From a technical perspective, the support for Nifty is actually shifting to 19,300 on strong put writing. Resistance at 19,400 is what we are tracking. And on the upside, another one, the level that we should be watching out for should be 19,500. If you see in terms of Bank Nifty as well, very interesting, 1,179 points is the kind of up move, Alex, that we've seen in the last 4 trading sessions in terms of Bank Nifty, right? So from 44,122 to 45,301. Now, the PCR, if you see in the same period for Bank Nifty, actually has fallen from 1.52 to 1.11. So that's an important trend that we need to look at because this indicates that if you talk about the put writers, they are actually not comfortable building positions at higher levels. So that's giving you an indication which is absolutely different in terms of Nifty as well as Banks Nifty. So watch out for these trends pretty closely in trade today. You'll be seeing all the support levels and the resistance levels already on your screen, but lots brewing in terms of markets, whether we will see selling pressure at higher levels that will start creeping in, or will it be a phase of consolidation?
I think if anything today, that entire financial pack is going to be in focus. Yesterday, you saw reactions on the basis of quarterly updates for Bajaj Finance. But today, you'll have the merged entity of HDFC data that is out today. We'll talk about that in just a bit. But there's also an update in terms of the change of the constitution of the Nifty 50. And that is based on an announcement that was made by the exchange yesterday. There will be a few exits on account of HDFC moving out. Himansh is joining in to tell you everything that you need to know about that. Of course, Himansh, good morning.
Good morning.
And there is one big headline in terms of what's going to happen with the Nifty 50.
Right.
What can you tell us about everything that is going to move in and out?
Right. So in light of the recent HDFC Bank mega merger, the NSE informed on Tuesday that the Index Maintenance Subcommittee has announced the replacements for HDFC Bank on its indices. First and foremost, we'll be seeing tech player LTIMindtree replacing the housing giant HDFC from 13th of July. This change will also apply to the Nifty 50 Equal Weight Index and Nifty 50 benchmark. As of yesterday, LTIMindtree's market cap stood at roughly 1.5 lakh crores, whereas HDFC's market cap stood at roughly 3.5 times that, at 5.3 lakh crores. So we'll be seeing a very sizable shift in the sectoral weightages and the stock weightages as well, which investors should look out for. Apart from that, LTIMindtree has also replaced HDFC in the Nifty services sector. Next, we see metal giant Jindal Steel and Power replacing HDFC on Nifty 100 and LTIMindtree on Nifty Next 50. Also, Mankind Pharma will replace HDFC on Nifty 500, Nifty 200, and Nifty Large Mid Cap 250. In terms of sectoral indices, if we talk about that, on Nifty Financial Services, LIC Housing Finance will replace HDFC on the same. And this will also reflect on Nifty Financial Services 2550 index. Apart from this, HDFC will be replaced by several other stocks on different indices, like Poonawalla FinCorp on Nifty Financial Services X Bank Index, Phoenix Mills on Nifty Housing Index, Brigade Enterprises on Nifty Core Housing, and Ambuja Cements on Nifty High Beta 50. HDFC will also exit the ESG indices such as Nifty 100 ESG, Nifty 100 Enhanced ESG, and so on. With effect from July 1, HDFC Bank has successfully completed the merger of HDFC after getting all the requisite shareholder approvals. However, 13th of July is the date fixed for the share swap between HDFC and HDFC Bank. And with that said, HDFC will be delisted from all the stock exchanges from July 13. It's important to note for investors that as indices composition changes, the passive funds and the index tracking funds will be rebalancing their portfolios. So that is something investors should look out for in the coming days.
Thanks, Himansh. And on that point as well, a lot of brokerages that I've been talking to as well have been indicating that with regards to LTIMindtree, passive funds will see, you'll see an inflow of almost $150 to $160 million that could be coming in with regards to LTIMindtree. And if you see in terms of the stock performance, a 6 to 7% up move is what we've seen in the last 1 month. Now, whether a further uptick is expected on this one is what we need to wait and watch.
Yeah, certainly. And thanks, Himansh.
Absolutely.
There are a few interesting brokerage calls that we've also pointed to with regard to LTIMindtree, and there are a few that are quite positive on the stock. So we'll have to see from a business perspective as well how they kind of report their latest numbers.
And with that, if you see, even the metal counters, right? Metals have been in focus. In fact, Rishi, who's standing by with us as well, who's been covering the metal space pretty closely. He has seen clearly there has been, it's pretty cyclical right now. You're seeing the ups, you're seeing the downs, and everything has been dependent in terms of what China is doing. So I think Rishi will probably during the day give us more details in terms of what could be expected from a JSPL.
No worry, we're not asking you about metals
right now. But clearly, let's talk about the Genus Power, Rishi. That stock has been in focus. Good moves that we saw in yesterday's session. What are the key developments apart from the order win now?
So as I said, so basically the order win that Genus got, so it basically signed a agreement with GemView Investments, which is an affiliate of GIC, which is a Singapore-based investment firm. Now, this agreement is to set up a platform for undertaking advanced metering infrastructure concessions, in which GIC will hold 74%, while Genus will hold 26%. Now, it's important to note here that it is not the combined entity will not essentially produce smart meters. They will instead bid for concessions that will come out, and then eventually Genus will be the exclusive supplier of smart meters under this combined entity. Now, these companies have already committed to an initial capital outlay of $2 billion, and Genus will, as I said, Genus will be the exclusive supplier of smart meters after they have bid for the concessions. Now, Chiswick Investment, which is an affiliate of GIC, has agreed to invest up to 519 crores through preferential allotment of warrants, which will be around 15% of the paid up capital of Genus if GIC decides to exercise those warrants. Now, this deal will be the largest in the smart metering space in India, and it will also help Genus with some of its necessary capital for its own manufacturing. Now, Genus had already bagged an order this week worth 2,200 crores for installation of smart meters of about 27.69 smart meters, and its order book value stood at around over 4,000 crores for FY23. Now, this platform will also assist in the rollout of smart metering projects under the revamped distribution sector scheme, or RDSS, that was initiated by the Government of India. Now, this scheme was introduced to reduce the losses. So, because such projects generally lead to commercial and technical losses of about 15%. So, under this scheme, the government plans to install around 250 million smart meters by 2025. So, it represents a huge opportunity for Genus, considering that it is the largest manufacturer of smart meters.
And that's going to be an interesting one to watch out for, with the kind of up move that we've already seen in yesterday's session. Order book
9%,
around,
if I'm not
yes,
mistaken.
and the order book itself is around little over 4,000 odd crores. The new order which is coming is little over about 2,000 odd crores. So now execution is going to become key as well for this company. In fact, we'll be speaking to the management today as well.
Okay, that's one thing to look forward to. Thanks so much, Rishi, for that. We have quite a few business updates. I was mentioning this at the start of the show, and you had Bajaj Finance yesterday, but you have, for the first time, provisional numbers for the merged entity of HDFC Bank. And for the first quarter, it turns out that the combined advances grew by about 13% to 22.45 lakh crore rupees. If you remove the wholesale book of HDFC Limited, then that book has grown, or those advances have grown as much as 15.3%. So clearly the retail side of the business is doing quite well. Total deposits for the merged entity have stood at 20.63 lakh crore at the end of the first quarter, and that's 16.2% more than the same period last year. And the merged entity's average liquidity coverage ratio stands at a very comfortable 120%. So that's certainly something to watch out for. HDFC Bank have both been moving higher since the announcement.
Absolutely.
And in fact, since the first of this month as well.
Bank is already at a life high. And
Absolutely.
HDFC Limited is at a 52-week high.
Yes, and we were talking to Chakri yesterday, where he was talking about that arbitrage opportunity closing as we go closer to the date of the 13th. But then clearly both of these stocks have to be watched, have to be put on your radar. Bandhan Bank is another one that you should watch out for in trade today. It could correct. Not the best news coming in from the perspective of the management exit that was announced yesterday. The Chief Financial Officer, Sunil Samdani, has resigned effective from the 30th of September. But it also had business updates in the form of loan growth, which stood at 6.7%. Deposit growth was a healthy 16.6%, and the CASA ratio has come in lower. It now stands at 36% versus 43.2% a year ago. Nomura has pointed out that this exit is going to be negative for the counter, and that's despite the fact that it is trading at a significant discount to its 5-year average multiple of its one-year forward book value. It's currently trading at 1.5x that one-year forward book value. Let's move on to AU Small Finance Bank then. Another update here. Gross advances up as much as 29%, and they stood at 63,635 crore rupees. Total deposits were up as much as 27%, and the CASA ratio stood at 35%. A couple more small banks to tell you about. RBL Bank saw its total deposits grow as much as 8%, and CASA increased to 31,927 crore rupees, which took the ratio to 37.3%, which is healthy for a small bank. Gross advances grew as much as 20%, and that's something to watch out for in trade today. You had IndusInd Bank also that registered quite a strong advances growth of 21% in the quarter gone by. Its CASA ratio, however, has dipped to 39.9% versus 43.2%. Deposits, however, on a whole, have risen as much as 15%. Hiral.
Right. So overall, all of these will be in focus, and I think it's a day of the financials as well,
Yes,
though the
certainly.
smaller names. So let's see how that actually pans out in trade. But shifting gears to the FMCG space, you have a Colgate Palmolive. If you see the stock, Alex, in yesterday's session, in the last half an hour of trade, we did see a sudden spike that did come in terms of the counter. And now you also have a MK, which has released a note on the same. Varsha standing by to give us more details. Varsha, they have initiated coverage in terms of Colgate. What do they have to say?
Yeah, hi guys. So MK has initiated coverage on Colgate Palmolive, and they've given a target price of rupees 1,560 with a sell rating. Now the interesting thing is, what are the factors leading to the sell rating? Is one of the reasons is, so in 2015, Colgate Palmolive used to have, market share in terms of volume of around 57%, but now, today it is 48%. And the other thing is the natural segment, the one of the segments of Colgate. The execution was very weak when it comes to natural segment, but now company is expecting revival in this natural segment, thanks to Patanjali. And if you guys have seen the ad campaign that Colgate used to run, brush your teeth twice daily, that actually helped Colgate to gain market share. But now it's been years, Colgate is not concentrating on that ad camp, which is actually good, which actually has good scope to grow. So this is one of the things that Colgate can concentrate on to get the market share back. Now coming back to MK, so according to MK, the valuation, there should be derated in the valuation, but the valuation, so the MK has given the sell rating on this because it feels the valuation should be derated. But again,
Yeah, it's a weak execution
Yeah.
and the competition coming in from companies
but yeah,
like Patanjali.
the valuation has been protected due to the margins aided, and also the new CEO coming on the company, so turnaround can be expected. So these are the reasons the valuation of this company has been protected.
That's a fair
Absolutely.
point.
And clearly, MK is pointing out that the new CEO has the potential to get the growth back. So everything, rests on his shoulders from here on, from a strategy perspective as well. Thank you, Varsha, for getting
Thanks,
us
Varsha.
the details as well. So that's with regards to Colgate Palmolive. But moving on, a few of the other names that are in focus on the back of fundraising, we have Suzlon. Now, Suzlon has been an interesting one, Alex, if you go to see, because in the last 1 month, 60% rally is what we've seen on the counter. And now the board is considering a capital raise. 7th of July is when the board will be meeting. Overall, if you see that the company has turned net worth positive almost after a decade, and they've given out a number of around 1100 odd crores, and they've also reduced their debt by around 80% year-on-year basis in FY23. Last year also, Suzlon raised around 1200 odd crores through rights issue, and the leverage now is merely 1 times debt per EBITDA. After a gap of 6 years, the company has managed to come back in the black in FY23. So I think lots to watch out for in terms of Suzlon in today's session. IOC also will be considering a fundraise via rights issue, and they will be meeting on the 7th. And the reason why they are looking to raise funds is to meet the capital expenditure for various projects as well. So it's mainly a capex related fundraise. Moving on, if you look at Som Distilleries, they are also expected to look at a fundraise, and this is going to be via preferential or a warrants issue on the 8th of July. Now, clearly, it's interesting to see how the company has actually increased its market share in Karnataka by almost 6 times in 3 years. And as we know, that's where the hub is in terms of majority of these alcohol companies who garner majority of their market share. So lots to watch out for in all of these companies. And lastly, BHEL, apart from the fundraise, wherein they've extended their gas turbine agreement with General Electric. Now, they have been in partnership since 1986 already, and they are market leaders in this segment. So what pans out from here on is going to be interesting. And you have Krishna Kumar Thakur, who's also joined the BHEL board. So there could be some bit of an uptick that could be coming in there.
Apart from all of the stocks that we've already spoken about, there's one counter that will be in focus that is a very big development, and this is in the auto ang space. We spoke about this yesterday as well. That's a pack that has been in focus. Sajid is joining in to tell us about Samvardhana Motherson Sumi, which has done another acquisition, and this is
7th since 2022.
Absolutely. Wow. And this has to do with a Japanese company that manufactures sunroofs as well as fuel tanks. How significant would this be?
So, it's an expansion into geography for Samvardhana Motherson International, which is SAMIL. If you look at, they're acquiring the 81% stake from in Yoichio for roughly around 1,050 odd crores. There is Honda, which will hold nearly 19% stake in the company going forward. But it's a long drawn process, because first this company Yoichio is listed in the Tokyo Stock Exchange, and they have to first delist it from there, for which Honda has to buy out the minority shareholders or squeeze out the minority shareholders once they have reached 2/3 shareholding, and then the transfer of two-wheeler business will happen to Honda, and then this business will be spun off in a way where 81% will will be held by SAMIL and 19% by them. It's a big business. It gives them a revenue of nearly 6,500 odd crores. They have a healthy EBITDA margin of 11.3, 11.4%. If you look at it for FY23, and it's being part of the overall plan to reach $36 billion, which they have planned. They are already with all the acquisitions which are in play as of now or in work in progress. They're looking at $19 billion from revenue. So there's another, 16, $17 billion which of revenues which they would either get through organic play or through acquisitions. So we've been there is an interaction which is planned later in the day with the management, Laksh Sehgal and the CFO. And there we will be asking them with respect to how they're planning to acquire and get to the next $17 billion of revenue which they have targeted. They're already sitting on 7,000 odd crores of debt, net debt. The acquisitions in play would bring them another $600 million of debt, which will come in. So they will have a debt of $1.5 billion, and they're thinking would be whether they will be able to manage that debt under 2 times EBITDA or not. That's something which we will be asking the company. And so watch out for SAMIL. They are on an aggressive path of acquisitions. How that pans out, how they will be able to scale it up and reach the $36 billion mark is something which we're going to ask the management.
Right. And overall, I think the deal is also expected to be EPS as well as ROC accretive, because taking the valuation, I think it's done at around 1.5 times equity to EBITDA. So brokerages are saying it will be accretive, number one. And one more thing is in terms of the Prism deal, which they are looking at as well. Apparently,
that's a small acquisition.
Exactly, but that is going to give them foray. It's more milestone based, which will give them foray in the non-automotive segment. So how that pans out from a segment perspective is going to be interesting.
So they're into Prism is into screens, right? What do you call the big screens which are used there? Whether they will be able to use that technology to go into screens for automobiles and other spaces is something which is it's a small acquisition which they have done. There is a milestone based payment which they have to do, and they can take up the stake to up to 81% or so from there.
And I think the way the market will actually come out to be in terms of the TAM, what's the addressable market they see out of it, that's how they will also look at addressing the overall acquisition.
Yeah, so it's overall plan of having an ecosystem of all major accessories required in automobile going forward. So this HO provides them with sunroofs. It also provides them with fuel tanks and
yes.
tail lights. These are something which Honda sources from HO.
No, and Honda is the biggest buyer of.
It is the biggest buyer, and they have an aggressive target of how to scale up over the next 3 years. So they have a order book presence which is there, but which also allows them to come and serve other markets, other OEMs as well. Because earlier it was only limited to Honda. Now they have the offering which can be given to other.
The addressable market becomes bigger for
them. A lot. Look. Go out in the market and look at all of the new cars. Most of the penultimate or the top variants have sunroofs. So the addressable market suddenly is incredibly large if they bring it to India or they bring it to a large automotive market.
So it's a must-have feature for a medium to premium level of variant, but the usability is very limited.
Yeah, that's absolutely.
If you have 2 kids, and I'm not saying you should do this, and maybe Sajid can give us a few pointers of how not to get your kids to poke their heads through the sunroof. But that's a conversation for another day.
But Sajid, that you're with us, a quick update in terms of what's happening with PKH, because the latest is that they have scrapped the IPO. What's it that you're picking up?
PKH, I was very confused when I was interviewing the management, because they were into construction, they were into PPAC, they were into hospitality, they were into restaurant management, and there was no clear trend which was coming through it, except that, because in the earlier part of the building a business. It was a family business, and they had experience in many of these areas, so they have ventured into various areas. Now I think that's a confusion which went to the QIBs as well, because we didn't see the QIB portion getting subscribed. As a result, 65% was only subscribed by retail and HNIs, and then they had to withdraw it, because there's a condition that if you don't get QIBs to come at least 90%, they will have to withdraw the IPO. And that's what has happened. And it was a 370 odd crore IPO, where 270 was for primary issuance, and 100 odd crores was 109 crores was OFS, which is there. 140 to 148 was a price band. So the price was nothing, but I think it is more of the
Lack of
model,
clarity.
the business model, which was not
Not
coming through for them, because they were into PPAC, which means that they had a project also in Delhi, the Delhi police headquarters, which would be giving them some 70 odd crores or 78 odd crores for every year as annuity income, because they are investing on that. But point is, that model is not, it's coming through one subsidiary, and there are multiple subsidiaries there.
There was no linkage in terms of the various businesses that they've
which
been
is
doing.
there, no synergy which was coming there. It was too many individual silo businesses which was there, I think, and that's what is confusing
That's
the QIBs.
probably, it's not given them confidence, probably, from a business model perspective.
Yeah, like a band that is playing all different instruments that are tuned differently. Maybe you can call it that. Sajid, thanks so much for that perspective. Viewers, we've got lots to talk about over the course of the day, and it's probably building up to be a day of the financials. So watch out for that space. You'll find a lot on the channel as well, on the platform as well. There's a mother-son conversation that is lined up, and a few more that Hiral has also pointed out. So do stay tuned. This is BQ Prime.